In this topic, we'll take your baseline eIDAS onboarding and e-signature solution and stress test it. We'll see how to add channels, roll out to new countries, and adapt to new rules, without tearing down your architecture each time something changes. Up to now, you've built this architecture step by step. You first got fluent in digital identity and eIDAS concepts, so the terminology is no longer a barrier. Then you framed a concrete banking use case and aligned it with business and UX goals. Next, you translated that into a deeper technical and compliance design. In this module, you'll test that design against change, new regulations, new ecosystems, new projects, so it can evolve instead of being rebuilt every time. Future-proofing means accepting that everything around your eIDAS solution will keep shifting. Regulations like eIDAS, AML, and KYC will be updated. Trust lists will evolve, and new technical requirements will appear. Vendors you rely on today may vanish or become too costly tomorrow, while customers expect smoother omnichannel journeys. A resilient design isolates these moving parts, so you can swap components and adapt policies without reconstructing your entire platform. As your bank introduces new channels, treat them as different doors into the same building. The core journey stays the same. You still verify identity, open the account, and sign the contract using the same services and APIs. What varies is how customers and agents interact, through a mobile app, web, or contact center. Keeping that separation makes behavior consistent, cuts testing effort, and simplifies compliance whenever a new channel appears. When you add a mobile app, treat it as a new front door, not a new house. Use biometrics or device-bound authenticators to unlock the same identity proofing and signing flows you already trust. Keep orchestration in the back end so every channel calls the same APIs and rules. Prefer push approvals or in-app prompts over SMS codes. And ensure any consent or signature from mobile ends up in the same audit trail as web. Contact center and branch-assisted journeys shouldn't become a separate universe from self-service. You still orchestrate the same identity proofing and signing steps, but expose them through agent tools. Agents must authenticate strongly, and everything they do is logged to prevent impersonation. Customer consent is captured in a traceable way, like recorded confirmation or a secure link. You can tune risk rules for assisted channels, while relying on the same central identity and evidence services. When you expand across the EU, resist the idea of new country, new system. Instead, think in terms of reusable identity provider types, national eIDs, bank IDs, video ident providers. You keep one onboarding model and plug different providers into it. Country differences become configuration. Which documents, which language, what consent text. Underneath, your stable concepts stay the same: identity, attributes, authentication, trust services, and evidence. Think of your eID setup as a universal translator. Every national scheme and local proofing method speaks its own language. The integration layer converts all of that into one canonical customer model. Mapping table. Because proofing providers plug in through standard APIs, you can swap them, and still keep clear rules about which combinations qualify for which products. Replaceability means you can swap out a QES provider or identity vendor without rewriting your whole system. To get there, your applications should never depend directly on a single provider. Hide vendors behind your own stable APIs and expose only what the business actually needs. From day one, design for vendor exit or failure, so switching later is a controlled change, not a crisis project. Abstraction layers let your internal system speak a single consistent language, even if vendors underneath keep changing. Your channels call a signing API or identity proofing API, and that API decides which QES provider, eID scheme, or remote identification service to use. The contract stays stable. New capabilities arrive through versioning. You also centralize SLAs, security controls, and evidence expectations at this API layer, so governance never depends on any single vendor. Vendor lock-in is as much a business issue as a technical one. Favor standards like SAML, OIDC, and ETSI formats, so another provider can plug in with minimal change. Negotiate contracts that guarantee export of certificates, logs, and evidence in interoperable formats. Whenever possible, run a second provider through the same APIs to prove your abstraction works, and keep any provider quirks confined to the integration layer, not scattered through your products. With eIDAS 2.0, identity is shifting toward a wallet you control, instead of accounts scattered across providers. You can view it as a secure container for verified attributes, your identity, licenses, even bank-verified details, reusable across the EU. For banks, this means acting as relying parties that consume wallet-presented evidence. You're not replacing KYC, but enriching it. Your architecture still needs the same foundations: clear assurance levels, explicit consent, auditable evidence, and integration with qualified trust services for signing. Treat the wallet as just another identity channel alongside your existing eID, video ID, or smart card flows. It feeds verified attributes into the same integration and mapping layer you already use. The key work lies in updating that layer, accepting wallet payloads, validating them, and mapping them into your canonical customer record. You'll also extend consent and evidence logs for wallet events and design journeys where wallet and traditional methods coexist for many years. New trends will keep arriving: fresh biometrics, device credentials, updated AML rules, and new trust services or formats. Your aim is to treat each of these as plugins, not triggers for redesign. Authentication changes should drop into your existing factor framework. Regulatory changes should mostly mean tweaking business rules and risk scores. New trust services should integrate behind stable signing and evidence APIs. Regularly review your architecture so it stays compliant, extensible, and boringly predictable. You now have a blueprint for evolving your eIDAS banking solution without constant rewrites. Keep the core use cases stable, wrap them in clear, well-versioned APIs, and treat channels and providers as interchangeable plugins. As new wallet schemes or cross-border requirements appear, you swap or extend components instead of rebuilding. Use this architecture together with the end-to-end view from earlier in the course as your reference model for future identity and trust projects.